results of the meeting, the interest rate decision and other monetary policy decisions, but also the Bank of England will release its inflation report, and the minutes of today's meeting, so we'll find out how the members of the British Central Bank have voted today. Let's review the picture looking at the weekly chart of the British pound. Firstly, here we can see that at this moment the pound remains close to 7-month highs and in the vicinity of an important psychological level of 1.30. Last week, the British pound took a leap to the downside, but the 50-week moving average, which is located at 1.2818, provided good support, and after all, the British currency managed to bounce from this level and return towards 1.30. All in all, the fact that the British pound is at these 7-month highs is connected to the recent, more or less recent news that the UK Prime Minister Theresa May decided to hold snap election on June 8th. And well, we can see that political agenda is really impressive in Europe. Firstly, we got French election. Now it's time to talk about the UK snap election. And all in all, it is expected that the ruling Conservative Party will manage to strengthen its positions in Britain and thus be more resourceful and more able to hold British economy together and to manage the process of Brexit. This gave British pound some stimulus to get to these levels we are currently seeing. Still, it's clear that 1.30 is not an easy obstacle to break for the bulls, and if we look further, we can see that there is a bearish Ishimoku cloud. I'll now try to make it a bit brighter for you to see. Here it is. The lower border of the weekly Ishimoku cloud is currently located around 1.3090. Then the Ishimoku cloud is so wide and heavy, it's certainly not easy for the currency pair to break. So during the times of the general downtrend, when the Ishimoku cloud is above the current prices, it acts as a resistance level. And if we look earlier at the weekly chart at what happened in the year of 2015, we can see that the same bearish Ishimoku cloud prevented the British pound from appreciation. And now this downtrend continues, and once again the cloud is acting as resistance. The moving averages on the weekly chart are also having bearish bias, although the first obstacle the pair has managed to overcome. This is the 50-day moving average, about 50-week moving average, about which we have been speaking today. This level is now located at 1.2785, and I'll mark this level as support for the British currency, because once this level played the role of resistance, and now it plays the role of support. This is how things change in the currency market. In addition, stochastics indicator is in the overbought area, so it also means that the bullish momentum is kind of declining here in GBPUSD, and the weekly lines of the Ishimoku indicator, the red line and the blue line, are more or less horizontal. So another sign that momentum to the upside is not really strong. So moving to the daily chart here, we see that on the daily chart, the moving averages with shorter term periods like the 50-day moving average is turning to the upside and getting ready to cross the 200-day moving average to the upside. This is a bullish sign. Yet the lines are significantly below the current prices. So the general tendency, the general idea is that the prices may return to the lower levels, just support at 1.2785, before they continue their attempts to get higher. At this point, I think it is wise to add some fundamental picture to our technical observations. And it is important to point out that the Bank of England is not expected to change its monetary policy today. The regulator is expected to maintain its rather loose monetary policy and to keep the benchmark interest rate at the record low minimum. The markets will be interested in the fact of how the members of the bank's monetary policy committee have voted. Last time in March, one of the MPC members, Christine Forbes, voted for a rate hike, and this was a positive surprise for the British pound at that time. She is expected to stick to her view that a rate hike is necessary, but her vote won't be that important any longer. What markets will be concerned about is whether other members of the regulator have joined Forbes in her desire to raise interest rates. There are some candidates who may do so. This is not regarded as a very likely option. So despite the fact that the markets are currently preparing to some kind of disappointment from the Bank of England, and this is what we hear from the majority of the analysts, if there is such unexpected event as two members of the Bank of England's Monetary Policy Committee vote for a rate hike this time, then certainly we'll see an attempt of the British pound to break 1.30 levels, and we'll see the prices trading higher than this level. Why the majority of analysts are so negative about the Bank of England, and why the analysts expect dovish comments? Well, despite the fact that there were some bright spots for the British economy, I mean strong PMI data, strong services, manufacturing and construction PMIs, which have been released recently, data today showed that manufacturing data, industrial production data of the United Kingdom were rather weak, and we see that the overall performance of the UK economy remains mixed. So judging this rather controversial economic data and the fact that still there is a Brexit to make, and the fact that there will be election in June, the Bank of England is expected to refrain from any hawkish comments and refrain from saying that high inflation creates necessity for the regulator to raise interest rates. Inflation, indeed, in the UK is above 2%, and that may be a reason for the Bank of England to start normalizing its monetary policy. But once again, there are many factors which kind of prevent the central bank from being too hawkish. So if the Bank of England doesn't sound hawkish, if the governor Carney isn't concerned with high inflation, and if only one member of MPC votes for a rate hike, then we'll see the British pound correct to the downside, and will target levels at 1.2785. The next support will be located around 1.2625, 1.26. On the other hand, if there are two votes for a rate hike, and if Carney expresses concerns with high inflation, then the pair will challenge 1.30 mark and may approach 1.31. But at this point, there will be resistance we will be seeing. Let's also have a look at Fibonacci levels from the Brexit decline to the lowest points of this year, and we are approaching 38.2% Fibonacci, and this level is located near 1.3140. So I would like to keep this in mind as resistance as well. So let's also have a look at the weekly pivot indicator. Here it is, just to renew its levels. And I remind you that the blue line here is the pivot line. So as long as the British pound is trading below this line, the weekly bias is to the downside. Above this line, the weekly bias is to the upside. Here we can see that the pair is consolidating around this pivot line located at 1.2930, and we see supports and resistance levels provided by this indicator. So you may use these levels as reference levels for your trading positions as well. Usually when the pair is breaking the first resistance or first support, you can use the other two resistance and support levels as your targets. This is how these levels work.